Okay guys, so in this video we're going to be covering this part, the part 2 of cash flow, right? Meaning the operating activities, right? So in this video we're going to be doing dividends paid, uh, income tax paid, and interest paid, right? Now guys, with our dividends paid, let me first explain this dividend thing, yeah? Now let's say you are a shareholder of a company, right? Meaning when you are a shareholder of a company, it means you own a particular number of shares in a certain company, right? So in return, what do you get out of being a shareholder? You get paid what? Dividends, right? You get paid dividends. So your dividends are paid as follows, right? We have what is known as maybe let's say for our current financial period is 28 February 2021, right? So for this financial period, we are going to receive dividends of, interim dividends plus uh, final dividends, right? Meaning interim dividends are dividends that are paid during the financial year, and then final dividends are dividends that are paid at the end of the financial period. Meaning these ones are usually called declared dividends. Meaning declared dividends are dividends that are not yet paid, right? Now, guys, for example, guys, now you can have a financial period, maybe let's say 28 February 2020, and then the 28 February 2021, right? Let's say maybe our shareholders for dividend were as a shareholders for dividend, yes. So our shareholders for dividend for 2020 was 20,000, right? And our shareholders for dividend for 2021, meaning our current financial period, is maybe 80,000, right? Now remember guys, shareholders for dividend are just only final dividends. They don't include interim dividends. It's just final dividends, meaning declared dividends, right? So guys, like I said, declared dividends are dividends that are not yet paid, right? So in this case, we are here in this current financial period, so these dividends are not yet paid, right? But then these ones, they have been paid, right? So when you calculate your dividends paid, we are looking for dividends that have already been paid, not necessarily those that are due or are payable. No, we're looking for dividends that have already been paid. For example, number one, this dividend has been paid. If you ever see yourself in a situation whereby you see shareholders for dividends for the last financial period and shareholders for dividend for the current financial period, the one that has been paid is uh, the one that the shareholders for dividend for the last financial period, meaning this one is the one that has been paid. Now, what else has been paid? We have what is called interim dividend, that is paid during the financial year. Interim dividend is also paid. So for dividends paid, you must find yourself having what, shareholders for dividends for last financial period plus interim dividends. Yes, you must see yourself in this situation, right? Maybe for example, I have what, shareholders for dividends for last year, which is 20,000. Now what about my interim dividends? My interim dividends, maybe they can give me my interim dividends straightforward. Maybe let's say, or they can say my interim dividends is 35,000. You can say what, 35,000 here, right? So simply, what am I gonna do? I'm gonna say 20,000 plus 35,000. What am I getting? I'm getting 55,000. So therefore, these are my what, dividends paid. But they can trick you like this, ne? They can trick you. They can say, uh, you see here, they might not give you your interim dividend straightforward, but this one, the shoulders for dividend for last, they will always give it to you. But then, interim dividend, they can try to trick you, right, and not give you an interim dividend straightforward. And they can say, ne, uh, total dividends uh for the year is maybe 100,000, right? Meaning total, what makes up total dividend? Total dividend is made up of what? Interim dividends plus shareholders for dividend of the current financial period. Meaning you have what? You have shareholders for dividend for the current financial period. You have total dividend, meaning the difference between these two will give you what? Your interim dividend. Meaning I would say 100,000 minus what? My 80,000. Then I'm getting my 20,000 of what? Interim dividend. Then you're gonna take your interim dividend and add it together with your what? With your shareholders for dividend for the last financial period, and therefore you have your what? You have your total. I mean, you have your dividends paid. Always find yourself in this situation, right? No matter how hard or how tricky the paper gets, always find yourself in this situation, right? Now, let me move. Let me go to a question so that you guys maybe can see what I'm talking about, right? Let me erase here first. Okay, then I'm moving to here. Okay, here. So guys, if you can see, they're saying the activity, I mean the information relates to Fezile Ltd for the financial year ended 28 February 2021, right? So they're saying that calculate the following amounts for cash flow statement, right? They're saying calculate income tax paid, calculate dividends paid, but now we're doing what? Dividends paid. We'll come back to income tax paid after, right? Now, whatever, one other thing that you need to highlight is what is your current financial period, like your financial year ended. So your financial period that ended is 28 February 2021, right? So make sure you highlight it, guys, so that you can see like which period are you working for, right? So let's see. So we're going to look for shareholders for dividends, right? So if you guys can see here, I'm having my shareholders for dividends here, which is 96,000 and 148,800, right? So if you guys can see, I'm having 29 February 2020 and then 28 February 2021, meaning these dividends are paid because they are the shareholders for dividends for the last financial period, meaning these ones have been paid. So already I'm going to take this amount as being part of my dividends paid, right? Now I have to look for something that has to give me I have to look for my interim dividend, right? Now if you guys can see here, we're having, if you can see from information D, I'm having an interim dividend of 18 cents per share was paid on 30 September 2020, right? And a final dividend was declared on 28 February. Which final dividend? This one has already been, meaning it has not yet been paid. So this one has been given to us, but we have to look for what? Our interim dividend, right? Meaning it has been given to us in cents, meaning you have to look for, sorry, our number of shares, right? So let me move down and see if there's no other information. Okay, so if you guys can see here, on 30 November the directors issued 180,000 shares at 8 rand, 80 each, right? On 28 February 2021, the share capital comprised of 800,000 ordinary shares, right guys? So in this case, guys, what are they trying to do here? So already they've given me shares that have been issued during the year, and they've given me shares at the end of the year, right? Remember guys, the ordinary share, let me write here. So if you guys can see, we have to have opening balance of shares plus additions will give us what? Shares at the end, right? Meaning in this case I have shares that have been issued during the financial year, shares of 180,000, right? I have 180,000 shares issued. I have 180,000 shares that have been issued, and then I have is it 800,000? Yes, 800,000 shares at the end of the year, right? Meaning 800,000 shares at the end of the year, right? How can I find the opening balance of my shares? So I'll simply say 800,000 minus 180,000, right? Now my shares at the beginning are going to be 720. Yes, it has to be 700. No, 620. 620. Yes, 620,000 shares. So guys, you have to look at something. When did they pay their interim dividend? Let's see when they paid the interim dividend. So our interim dividend was paid on 30 September 2020, right? And then let's draw a timeline here. So our timeline is gonna look like this. So our financial period ended 28 February 2021, and then it starts when 1 March 20 uh 2020, right? So I'm going to say March, April, May, June, July, August, September, October, November, December, January, February, right? So this is our financial period, right? Now let's see, guys. So I assume that 620,000 shares are here at the beginning of the year, meaning 620,000 shares are here at the beginning of the year, right? Now additional shares were issued when they were issued. They were issued on 30 November, right? 30 November. Here I'm having 30 November. I can also say 1 December. Let me just say 30 November here. So I'll say 30 November. How many shares? 180,000 shares. At the end of the financial period, I have how many shares? 800,000 shares. Now, when was my interim dividend issued? When was my interim dividend paid? I mean, sorry to say that. Let's see. My interim dividend was paid 30 September, right? Meaning 30 September. So September is here. So therefore, meaning any shares that came after 30 September, I'm not gonna calculate my dividend using those shares, right? Meaning I'm gonna calculate my dividend using these shares because they came before my interim dividend, right? So I'm gonna say 620,000 shares multiplied by how many cents? 18 cents, which is 18 over 100, which is 18 over 100. Therefore, that's my what interim dividend. So I'm gonna say 620 multiplied by 18 over 100. I'm getting what? I'm getting 116. I mean 11600. Yes, 11600. Right. So therefore, these are my what? These are my interim dividends. You see how long I had to find my interim dividend, guys. So always, guys, make sure you find yourself having your interim dividend and what shoulders for dividend for the last financial period. So I'm gonna say, therefore, my total dividend will be. Let me come to this calculation. Here. So my interim dividend are gonna be. So I'm gonna say interim plus shareholders for dividend of last financial period, right? So my interim dividend was 1,600 plus what is my shareholders for dividend? My shareholders for dividend is 148,800. 148,800. So therefore, the two are my total dividend. 148,800. So therefore, 260, 400. Yes, these are my total. I mean, no, I'm doing on the wrong. I was supposed to do on what? Dividends paid, guys. Yes, dividends paid. So therefore, my dividends paid are what? 260,400. These are my what? Total dividends paid, right? That's how you calculate your what? Your dividends paid, guys. Now let's move fast to income tax. I'll write income tax here. Sorry for that, guys. Income income tax. Right, now let's move to income tax. So how are you going to calculate your income tax? Income tax paid. So my income tax paid for the year, I'm gonna say, for income tax, always guys, you draw a what? You draw a T ledger, which is gonna be your debit side and your credit side, right? You can simply say income tax. Yeah, right. Now always guys, name balance. Let's say you have 2021 and 2022, right? So any amount that you're given at the at the beginning of the financial period, meaning last year, it will be your opening balance, and then the balance that you're given on our current financial period will be balance carried down, right? Now I'll show you what I mean, right? For example, they can say our income tax for the year, income tax income tax for the year is maybe 200,000, ne? And then we have our SARS income tax as being a debit balance of maybe 20,000, and then being a credit balance of maybe 25,000, ne? So in this case guys, let me look at here, fast. For example, if you can see here guys, we're given a SARS income tax of 15,600, right? When is our financial period? Our financial period is 28 February 2021, right? And then our previous financial period is what? 29 February 2020. Meaning at the beginning we do not have any income tax that we owed to SARS. And then at the end of the year we had an income tax that we owed to SARS, which is what? 15,600. Right guys? So in this case guys, let's move to here. So for example, they'll say you have a debit balance that you owe to SARS, which is 20,000, right? And then they'll say a credit balance, right? So what are you gonna do? You're gonna come to your debit side, right? So debit side, you're gonna say balance brought down of what? Of 20,000, right? Now you're gonna go to the debit, you're gonna go to here, right? And then you're given an income tax of 200,000. So your income tax, you're gonna write it here. You can say income tax is of what? 200,000. Or you can write bank. Yes. But to keep things short, just write income tax because it's just a calculation, right? And then what are we doing? You're saying that we have a credit balance at the end of the year, right? So we have a credit balance at the end of the year, meaning credit balance is this side. So we're gonna say uh, balance brought down of 25,000. And when you take it back, it's gonna be a what? Balance carried down of what? 25,000, right? Now if you can see here, we're gonna say you add the two, right? And you take together this side, meaning you're gonna say 20,000 plus 25,000, you're gonna have what? 45,000, right? But wait, I made a mistake here. If you can see, you have to look at the bigger side, guys. What is my bigger side? My bigger side is 200,000. So therefore you're closing off with the bigger side. You see guys, I nearly made a mistake. You're closing off with the what? With the bigger side. So I'm gonna close off with what? 200,000 here. So I'm gonna close again here with what? 200,000. Always guys, you close off with the bigger side, right? Now if you can see, what can we do to these two amounts in order to make this thing balance? We're gonna say 200,000, you minus what? um 25,000, you minus 25,000, you minus 20,000, then you're gonna get your what? Your your income tax paid. So you're gonna say 200,000 minus 25,000 minus 20,000. Therefore, that's your what? You're gonna write it as bank. So 155 is our what? Income tax paid, right? So 155,000 is our what? Income tax paid, right? So for example, if you can see this here, you could see here we're having our income tax, right, which is 156,000, I mean 15,600, right? And then here they didn't specify which one is from debit and which one is from credit. They just want you to think now. If you can see, guys, we are having a current asset, right, and we are having current liabilities. So when is the beginning of the financial period? The beginning of the financial period is 29 February 2020, right? So the beginning of the financial period is here. We're having our income tax under current asset, meaning here SARS owes us now. We no longer owe SARS. In this case, SARS owes us, right? So in this case, this balance, I can take it to the what? I'm gonna take it to the what? Debit side, because SARS owes me now, right? And then if you can see income tax at the end, we're having it on there under current liabilities, which is 15,600. So in this case, we owe SARS, right? Which is the closing balance. So in this case, this is debit, and then this is what? Credit. Ne? Now let's go. So I'll simply come here to my calculations. You see, whatever that I did here, you need to do it using that information. You'll never get income tax wrong. You'll never. Now let's go. So we're having our T ledger account, which is what? Debit and credit. Can say income tax, right? Now if you can see, when is our income tax at the beginning? Our income tax at the beginning is under current asset, which is receivable, meaning it's on the what? Debit side now, 14,300. So I'm gonna say balance at the beginning, balance brought down of what? um 14,300. Yes, I say 14,300. Ne? And then we come again now. We are having a credit balance because our SARS income tax at the end of the year is where is an under current liability. So therefore I'm gonna say balance brought down under what? Credit, under the credit side. What is the amount? The amount is 15,600. I'm having 15,600. Right now, remember guys, if I have a balance brought down, it means before it was a what? Balance carried down. So I'm gonna say balance carried down of what? 15,600. Right now, my income tax will always be on the credit side, right? Because that's the amount that you owe SARS, right? So what's my income tax? So my income, they're saying net profit after tax is 658,000, and then income tax is 30%, right? So how do you calculate your income tax? So your income tax, you're gonna say 658, you multiply it by what? This is after, this is net profit after tax, right? So I'm looking for 30% over what? Remember, this amount is no longer 100% because tax was taken into account. So 100% minus 30. So therefore this amount weighs how much? 70%. So therefore that is my what? My income tax. So 658 multiplied by 30 over 70. I'm getting my income tax being what? 282,000. So my income tax is 282,000. So I can say income tax is what? 282,000. Remember guys, this is just your calculations here. You are just doing your calculations, right? Now if you can see from this side, this amount and this amount, compared to this amount, which one is the bigger amount? The bigger amount is what? 282,000. So I'm gonna close off with what? 282. So I'm having 282. I'm closing off with 282 again here. 1,000, right? Then I'm going. How will I get my income tax paid? This amount minus these two amounts. So I'm gonna say 282 minus 15,600 minus 14,300. Therefore, that's my what? Income tax paid. Minus 14,300. So therefore, 2 52,100 is my income tax paid. So guys, that's how you calculate your what, your income tax paid. So my calculation, you're gonna write what, you're gonna write what was my income tax, 282. You're gonna write 282,000 minus 100 and, I mean 15,600 minus 14,300. So therefore your income tax paid is 252,100, right? So that's how you calculate your what, your dividends paid, your income tax paid. And we also have what, interest paid. Interest paid is the simplest of them all. They'll always give you your interest expense. Your interest expense is always your interest paid, right? And this balances on your statement of under operating activities. It's gonna be in brackets because we paid what, dividends, brackets, because what, we paid our what, income tax, right? And also interest paid will always be in what, brackets. Interest paid is what, is the interest expense that they will always give you. You just put it there as it is. Then so far we are done with what, the part one of what, operating activities, guys. Thank you guys. Don't forget to like, subscribe. Yes guys, thank you.